Hello everyone, this is Arvind. Welcome to this week's forecast video. Actually, before we begin, I wish you all a very happy new year. Hope this year brings you great success in your trading career. So, please note that trading Forex and CFDs involves a high level of risk and may not be suitable for all investors. The analysis and opinions shared in this video are for educational purposes only and do not constitute financial advice. Past performance is not indicative of future results. So always manage your risk carefully and trade responsibly. So now let's jump into the fundamental news events which are yet to be released this week and how it might impact the market. So the major economic news releases for this week, starting January 5th, 2026, and what should we should be looking for as a trader. This week is all about manufacturing data early on and employment data towards the end. So volatility is expected, especially in Forex. So we start the week with on Monday we start with manufacturing PMI data from Asia and the US. Asian PMI numbers from China and Japan will give us an early read on global growth sentiment. Later in the day, the key release is the US ISM manufacturing PMI. This data often sets the tone for USD pairs, indices, and risk sentiment at the start of this week. Tuesday is relatively quiet of high impact releases. Markets may consolidate or react technically, digesting Monday's data and positioning ahead of the labor numbers later in the week. Wednesday brings important and midweek volatility. We get the U.S. ADP employment change, which gives an early hint toward Friday's jobs report. This is followed by the U.S. ISM services PMI, a major driver for the U.S. dollar, since services make up a large part of the U.S. economy. We also see Eurozone inflation data, which is important for Europe as and ECB expectations. On Thursday, traders will watch US trade balance, productivity, and consumer credit data. There, actually, these aren't always headline movers, but they can influence USD sentiment and positioning ahead of Friday's big event. We also get Eurozone unemployment data, which can impact euro volatility. Friday is the most important day of this week. The focus is on the US non farm payrolls report, including job creation, unemployment rate. This release often brings strong volatility across Forex, gold indices, and bonds. Canada also releases its employment data, which is critical for the CAT pass. So these are the important news releases for this week, which might impact the market. So please keep an eye on these news releases. Now let's get into the technical forecast on Bitcoin. So on Bitcoin, on the weekly chart, the price is in a corrective structure. I basically expect a double wave correction to happen here. As you can see, I have marked in the chart. So at the moment, the short term is bearish based on the weekly. On the daily chart, we can see we had a strong bearish momentum, and currently a correction is happening. So this correction might happen in the form of double wave to the upside, and then the price might move lower. There is also an alternative scenario here where this correction might happen in the form of a range, a flat correction. As you can see, some zigzags might happen, and then the price might move over further. So in both ways, I expect the bearish pressure to continue further in the short term based on the daily as well. So on the H4 chart, we had a strong bearish momentum, and currently a correction is happening. So these are the two strong resistance zones to watch out for the bears to take control in the near future. So until these two zones hold, my short-term bearish view still remains the same in Bitcoin. So now let's get into the next instrument, which is natural gas. So in natural gas, we could see that the price is in a bullish structure. As you can see, the price has created higher highs, higher lows, and we have a uptrend line here, most recent uptrend line. So until this zone holds, I expect. Until this uptrend line holds, I expect the bullish pressure to remain here. So the alternative scenario would be if this uptrend line fails to hold, then the bulls might lose its momentum and the bears might get in control. But at the moment, I expect the bears to take the lead here, as the evidences are looking in favor of them. So now let's get down to the daily. On the daily chart too, we had a strong bullish structure here. As you can see, price has created higher highs, higher low structure, and currently a correction is happening. Uh, and the way it looks right now, the correction is happening in the form of double wave down. So basically, I expect the price to continue higher further after this correction. So now we'll move down to the moving down to the H4 chart. Here, I have marked two strong support zones. As you can see, the first one is where the price is currently dancing around, and the second one is where the weekly uptrend line coincides. So until both these strong support zones hold, I expect the price to continue higher further in the short term. So that's all for this week. Hope this forecast helps you with your trading, and I wish this year brings you a lot of good luck, good fortune, and great success in your trading. Until I meet you in the next video, this is Arvind Akash signing off. Bye. Have a great week.